Welcome to Moving Iron with Casey Seymour and Greg Peterson, the podcast for anyone and everyone involved and interested in the business of ag equipment. If you want to understand what trends and market forces are impacting the price of your iron, you've come to the right place. Buckle up, it's time to move some iron.
Hello, welcome to Moving Iron Podcast. This edition of the Moving Iron Podcast is brought to you by John Deere. I've got Greg Senior Pete Peterson on to talk about SAP in the marketplace. Greg, how you doing today?
I'm doing well, Casey. How are you doing?
Doing good, man. Doing real good. We've got a few things going on we're going to hit on here throughout the show. But first off, let's just talk about the sheer volume of auctions that we're seeing right now. This is typically, late March, early April, things kind of start to taper off and we start heading into that planting season. But there's been no let up on the volume. Every month is a little more than the month before, and this is no exception. I guess we'll talk a little bit about what we're seeing happen in the market right now.
Yeah, definitely. We saw crescendo last week of March, Casey. Just a huge volume of just all types of machinery auctions, of course, across however you define, probably like the 25 states in the kind of the middle of the U.S., kind of Colorado out through Pennsylvania. There's so many seasonal consignment sales in March, so we're keeping an eye on those. But then, again, the farmer retirements, or the called retirements. I mean, end of last week, we ran across a number of sales that were, not happy retirements, but, basically the bank is dictating. But again, you wrap it all up and the volume of auctions. Again, I've been doing this a long time. It was smoking in raw volume in March. So then, of course, my deal is, how are prices holding up? And I had someone ask me that on Twitter the other day, and I just said, the good stuff, good condition stuff is actually holding extremely well to even maybe strengthening a little bit. If you have more, just kind of beat on stuff, higher hours, that's holding to dropping a little, but the good condition stuff, which to me has always sort of been the barometer of continuing to be very strong. I've got a couple of examples I could just bounce off you, Casey, get your take on some of these. So let's start with, let's go to Kentucky on Saturday. My friends Michael Harris Real Estate and Auction had a nice farm auction for, I think it was in, I don't know how they pronounce it, Keville, Kentucky, but 2016, so 10 years old, John Deere 8320R, nice rig, 2,439 hours. I think it brought 170, but then it had a 10% buyer fee, so the total nut was 187. And I did some quick figure in our machine repeat. Well, actually, just clicked on our average price tool in our website. And the average auction price on an 8320R this year is just under 153. And that's up 18.4% from last year. It was just over 129. And I know also on Friday in Terre Haute, Indiana, a Schrader auction had a sale with an 8320R. A little older one. That was a 10 model. That was a pre-def. 2,755 hours out. Did 192,750. So
that's good money.
Strong prices there.
Yep.
That sale in Indiana also had a 13 model 8360R, 1,876 hours. So low hours, 13 years old. That did 215.5, which when you look at things, that's the sixth highest auction price I've ever seen on an 8360R over 1,800 hours. And for red fans out there who are listening and watching, let's throw this one at you from Saturday. Adair, Illinois, annual spring consignment auction by Kyle Kelso Auctioneer. Great outfit there. Kyle sold a 21 model Case IH Steiger 540 four-wheel drive, 1,199 hours. That did 285. So given it had basically 1,200 hours, I thought that was good. And actually that same sale set a record on a 22 model John Deere 6R140 with a loader, 777 hours. We've talked a lot, Casey, about a loader tractor. That horsepower range has been just hotter. And that baby went for 163.5. That's the all-time highest that I've seen. So again, the last few days, just solid pricing on good stuff.
Yeah. Well, it's just, you've a couple of those examples you put out there in that 320, and that was a 10 model with 2,700 hours on it. Good, I'm sure, good looking machine because it didn't have very many hours on it. So can't can be too banged up. But you're looking at something there where you're looking at averaging out about 270 hours a year ish, if you do the math on it. It's that machine brought 192,000. So I mean, that just shows you where good clean machines are at. Even the first one you talked about at that first 320 you talked about, coming in at 187. I mean, again, 2,700 hours on it as well. Newer machine, obviously, a few more hours per year on it. But if you look at where that came in at, again, that's showing some strong stuff out there. So, it's coming back to the same thing over and over again here. We've talked about it several times, but the same thing we're to keep coming back to is those good, clean stuff is selling well. And as that stuff comes off the marketplace, I think the one thing to pay close attention to is what's the next level look like when you take the good stuff off. Now you got the next level there. What's that going to start looking like? And right now there doesn't seem to be any lack of good clean equipment on the marketplace. So that's the thing that's really popping out to me.
Yeah, and I think the volume of auctions that's sort of maybe helped fill the, people are focused on used right now, and we can watch the figures on the new sales just been trending down, which we understand. But I think maybe the volume of this stuff, and also it is a lot of older farmers retiring or estate sales, and that kind of stuff. Maybe if it's an 80-year-old farmer, he bought a tractor 10 years ago and he didn't smash on it and kept the hours off it. You see a lot of that, and those type of tractors and equipment tends to be what everyone is looking for, just when dollars are tight again, versus buying a new one. We had a couple other examples. There was a sale Thursday in Tallulah, Illinois, that Sullivan Auctioneers and Big Iron had. Retirement sale. I think the farmer's name was Heinrich. Very nice stuff. The 12 model 9410R with 2,694 hours did $230,500, which third highest auction price ever on a 9410R over 2,500 hours. And then you drift a little older, Casey. He had a 88 model 4450 two-wheel drive, which those two-wheel drives from the 80s and 90s, just red hot the past few years if they're nice.
Yeah.
This one had 5,028 hours and went for 53.4 on a 88 model 4450. Now that's a third highest auction price ever on a two-wheel 4450 over 5,000 hours. So again, that happened last Thursday. Times are tight, but again, when you have that kind of stuff, the buyers will find it for sure. And of course, Sullivan's a Big Iron market. The heck out of their stuff, do a great job. So
yeah, they do a good job. They do a really good job. So plenty of stuff looking out there. And if you look out ahead at the volume of auctions that are coming, they're still there. I mean, there's still a big chunk of auctions still coming down the pike. So interesting thing to watch, definitely for sure. All right, before we started recording, you and I were kind of hashing through what we were going to talk about. This EPA thing popped back up, and we talked about this once before, and they announced it back in January, February, whenever it was. Right. They talked about it, but they've officially made it. As of March 2026, the EPA has eliminated the requirements for diesel exhaust fluids, DEF sensors in diesel equipment to eliminate limp mode, which basically is when you go through a situation where the DEF sensors start reporting a problem, it derates the machine and it draws back a bunch of horsepower, so that basically kind of renders it useless, for lack of a better term, and goes through all that. So they've talked about what that looks like, and they've done that. Interesting to see what that'll look like. Obviously there's going to be some states that are going to have a regulations standard based around what's going on. Like California, big example of that, right? I mean, that's probably the most extreme example you can come up with. But if you look at what their current CARB requirements are now, comparatively to what the EPA standard was before this, was a lot different than there. So it's going to be interesting just to watch how manufacturers react to this. It's going to be interesting to see what happens with the removal of DEF across the system. We looked it up here before we started. Obviously we Googled this, so by no means am I standing behind these numbers, but
the Google machine's pretty accurate. But
we're gonna call this a good swag anyway. So I guess what we found was to typically take off on a large piece of ag equipment, to take the DEF system off and quote unquote delete it. Somewhere between $2,000 and $10,000 is what it came up with, right? So that could be a whole range of things. You brought up a good point that as these machines start coming through, and if they've been deleted and they start making their way through the auction block, obviously that's going to start tell the tape there between two machines sitting next to each other. This one has and this one hasn't. What's that look like? As that starts rolling through, we're going to see things come to fruition. I'm really interested to see what happens with this. I'm really interested to see how many people start deleting machines and what that looks like. I guess I'm kind of in the camp of what's it cost for me to delete it versus what do I spend on DEF. That's going to be a conversation you see guys having. And the other flip side of that is I'm going to run it up until I have an issue, and then maybe you start seeing more guys delete that. So it'll be interesting to watch how this happens. But I think, like you talked about, what happens with the auction block is going to be the true tell of the tape at the end of the day of what this value looks like. And if it coincides with what we're seeing for low hour pre-DEF stuff versus where that same hour range stuff is falling at today, it's a pretty good indicator of what we're going to see.
Well, you're right, Casey. And I my 36 and a half years tracking this market every day, this I think will be the most, fascinating little test case. And the auction and pricing is no way around it. It's the canary in the coal mine. What do farmers want to pay for it? Has it been deleted? Has it not? So yeah, we talk about it every week, and I've been writing about it for years. The crescendo is growing louder. Farmers want really good condition pre-DEF stuff. They vote for it at auction, like we talk about here every week. But again, that gets fascinating. You drift into that period, and again, there's so many angles to this on the warranty side. It's like, well, just because EPA says, okay, hey, we're going backwards, so to speak, on regulation, but you're under warranty. I mean, what is your man? What is, you can't just, and if you do that, hey, I want to delete it, what did you just do? So the manufacturers are going to have their say. But to me, it's that right after warranty on out to whatever 2011 stuff.
Yeah.
Wow. Will that be an interesting mix? Because now let's say, Casey, you've got a 5-year-old tractor, combine or sprayer, skid steer, whatever, and you got to free up some cash. So you put a few items on an auction or whatever. You got a choice to make there. Do I delete? What's that cost? And then people are going to say, well, if I do that, how does that compare to if I don't do it? And of course, that's auction pricing, and that's the stuff that flows in every day. So, and then I guess the other piece of it is, we're all on this political whipsaw, and it's like, hey, we've been arguing right and left, and that whole, it's just so tiring. But now with these regulations, people, you'd have to wonder a little bit like, wow, politically, what if this thing flips in 2 or 4?
Yep.
You very well might. What happens then? Does the EPA go back to, oh, never mind, we're back to what we were? It's like, oh my gosh. Usually for business people, which farmers are and dealers are and auction companies, it's like when there's uncertainty, it tends to make you sit on your hands.
Right.
Farmers' dollars are tight. They don't want to sit on their hands. They want to make these changes. And they, I think, feel good that the government has listened to where they're coming from. But we just have to work through these details. But again, as we start to see, these things deleted, 5-year-old ones hit the auction market, yeah, how did that compare to one that wasn't deleted? That'll be fascinating.
Yeah. Well, nonetheless, Greg, no matter what happens, we'll be rolling coal again. So it'll all come back to the way it was.
Right. That is a comforting angle, isn't it? Through ups and downs, ground gets planted, and farmers, God bless them, do what they have to do, but it's all this uncertainty they have to deal with on every angle. It's just so, I suppose if we go back and ask our grandparents, and maybe the change wasn't as fast back then, but I'm sure they had to deal with the same level of uncertainty. That's just life, I guess.
Yep, that's for sure. It'll be interesting to watch, see what happens. I remember I went to South Africa in 2015, right after the final Tier 4 engine stuff took place in the United States, and same model of tractor that was working in the field, that would be working in the field in the United States, was still puffing black smoke. So it shows you that, I mean, the manufacturers absolutely can. They send machines all over the place that are different tier regulations and everything else. So that part of it's not a big deal. It's the what happens, what's legislatively, though, does that look like 2-4 years down the road? All of a sudden, is what happens when stuff like that happens. So I don't know. It's interesting to watch what happens. There's a lot of moving parts here. We're going to try to follow this as much as we can to stay on top of it for you guys. But as it is right now, for everything that I'm reading on the internet, you can delete it, delete your DEF system. Based on the EPA standards, obviously each state's going to be a little bit different. But, as it sits right now, deleting your DEF system is you have to worry about getting fined $3,700 or $37,000 a day like you've seen in the past. So
right, that's the way it reads. It's like a window opened, and if you want to do it, the window's just been opened by the EPA. So again, I've just been reporting on this ever increasing train of proof of what people want. I mean, look at that 4450. I mean, no, that's an 88 model, but even the like that. Well, another one I didn't even mention was last Tuesday auction up my way out of Curry, Minnesota, Steffes Group. They had a 10 model Case IH Magnum 245, so 10 model. Pre-def, very nice. It had 4,052 hours on it, went for 120. And if you dig into our data, that is the highest auction price ever on a Magnum 245 over 4,000 hours. And again, it's a 10 model, well cared for. Price of news up here, that magic 10-year-old mark we talk about, but now you drift back further, it's pre-def, and it's like, wow, that's when you get that check written for 120.
Yep, it's crazy to watch things happen the way they are right now. So, well, Greg, good place to stop. I appreciate you taking time to be on the podcast. I know you're out visiting your new grandson out there. Yeah. Congratulations on that, and give my best to your family about that. But it's glad you took time to do that, man. Congratulations.
Oh, hey, it's a great fun to visit with you every week, Casey. And everywhere I go, people are coming up to me saying they're listening every week to Moving Iron. So it's thanks for doing what you do.
I appreciate that. Well, Greg, folks want to reach out to you, just go to machinerypete.com, check it out there. There's a contact page there you can find, get you the link there. But probably the best way to find you is on social media, and you're pretty active on that.
Yeah, if you're on Twitter in particular, just message me there or send me a note, or Facebook, Instagram. I haven't done TikTok yet. I'm an old dinosaur, but maybe someday, Casey, Machinery Pete will try TikTok. I'm ever hopeful. Maybe my new grandson.
Work, Greg.
Maybe my new grandson someday will teach me how to do TikTok. How about that?
There you go. Right on. Well, Greg, appreciate you being on. We'll catch you again next week.
All right. Have a good week, Casey.
Stay tuned for Moving Iron podcast after these messages.
Looking for more accuracy, more productivity from your current planter? Let's get exact with precision upgrades from John Deere. Start with Exact Emerge and get accurate singulation and spacing at 10 miles per hour. Or choose Exact Shot to promote early root growth and cut fertilizer costs. And with Furrow Vision, save time by verifying seed depth right from your cab. Visit johndeere.com/planter upgrades and see why nothing runs like a Deere.
All right, welcome back. I got Jake Bryce back on again to talk about some stuff going on over at Machinery Scope. Jake, how you doing, bud?
Hey, I'm excellent. You?
Can't complain any, man. Can't complain any. So talk to me a little bit about your Partner Protect program, what that is.
Yeah, so we recently launched our Partner Protect program to help drive coverage across a farmer or any construction, landscaper, you name it, people that are running multiple units, and we're those dealerships are working on value-added service programs. Well, why don't we work with our dealer partners to create a fleet program so we protect the whole works, and then bring those back through you guys for the inspection on the front side. And then if there are any failures, now you know it's coming back to you as a dealership. Plus, added value to that equipment owner with a discount for multiple units enrolled with our coverage.
Right on. So talk a little bit about how that process works. How do I go through the inspection process, and how does that part work?
Yeah, simple inspection. We don't need to reinvent the wheel. The dealers have a great inspection process in place. Send us that inspection. We'll utilize that just for verification that there's not any pre-existing conditions. Add coverage. You got a second unit. We'll take 5% off of each of those. Mm-hmm. If for some reason we got coverage on one and then later add it, we'll give you that fleet discount at that time on that unit as well. So just looking to provide more value and options for dealers and their customers to save.
Right on. Well, Jake, you guys have done a great job of doing that over the years. I've always enjoyed working with you. So appreciate you being the podcast. If folks want to get more information from you, what's the best way to do that?
Yeah, go to machineryscope.com. All of our contact information is there. Of course, if you want to request a quote, send it. We'll be right back in touch with you to provide a quote for you and your customer.
Right on. Jake, appreciate you being on, man. I'll catch you again next time.
Yes, sir. Thank you.
Well, there they are, mocking you.
See you next year, loser.
That weedy area that's got you thinking, man, I hate that spot. Wish I'd sprayed better. Get the last laugh with a sprayer upgrade from John Deere. Precision upgrades that can increase your sprayer's performance, like ExactApply, advanced nozzles to give you more control at more speeds. It's just one of the many precision upgrades you'll find at johndeere.com. Now, let's see who's laughing.
All right, welcome back to Moving Iron Podcast. Got Sean Hackett here with Hackett Financial to talk about what's going on in the world of commodities. Sean, how you doing today?
I'm doing really good. Looking forward to a long weekend, 3 days of no trading, which I think, given the volatility we've had in the last month, I think everyone will be looking forward to 3 days where they won't have to look over their back about what's the next headline risk in the markets. But overall, at the end of the day, what has it done is it's given some very, very good opportunities for farmers to get some prices that a couple of months ago seemed unachievable. And that's a very good thing as long as they take advantage of it. The farm economy is going to be in much, much better shape despite the higher fertilizer price because they're getting a price that's at least compensating for that. It could be worse, I guess.
Right on. All right, let's go back in time here just a little bit. We had the March report come out, which a lot of people were waiting on that to come out because they figured there would be some adjustments there, some corrections there. We also had the plain intention report come out at the same time. Anything from that, Sean, that you can glean towards what we see happening right now?
Our forecast was that the survey occurred too early in the Iran war to really give a good read on what the farmer's actually going to do. He didn't have enough time. The farmer didn't have enough time to process. So that meant that the corn acreage number would likely come above expectations, which it did, and that the soybean number would come in below expectations, which it did, and then the cotton acres would come in above expectations, which it did. It just wasn't enough time to assimilate. It was just, had we not had maybe a few more weeks for farmers to really figure this out, I think we'd have gotten a cleaner number. So that's what we got. In terms of ending stocks or quarterly grain stocks, I mean, there was no real major adjustment on wheat. There's no really, nothing majorly different off on soybeans. Corn came in about 100 million bushels below expectations, which we thought we would start to see the downgrading of corn inventories. We think we'll get a bigger downgrade in the June report, maybe 200 or 300 million bushels below expectations to kind of bring the crop size last year down to where I think it should be versus where the USDA decided to stick their yield at. So we did see that number come down, but overall, I didn't really. It was one of the more uneventful end of March reports I've seen in a long time. And the markets, it didn't really react too much. It's. I don't think it really changes anything. I think it does. It didn't change anything of what anyone was really thinking about. Yeah, there's a couple of traders trying to trade short term, whatever. But overall, I don't think it really changed anything. I don't think it was that meaningful. And I still think we're going to be guessing what are those actual acres going to be based upon the weather, based upon how this geopolitical situation continues to play out. And if this fertilizer price remains high and stays high, we're going to see some adjustments downward in corn acres, especially in the West where it's dry. And we're going to see some downgrade in cotton acres. They have corn acres up. They have cotton acres up from last year. I'm not allowed to guarantee anything, but if I could, I would say I'd be pretty certain we're not going to see an increase in cotton acres. We're pretty certain about it. So
Yeah,
but anything's possible, and I could be wrong, but I don't think that's a good number. Let's put it that way.
Yep. I would agree with you on the cotton side. I don't see a lot of guys jumping back into cotton that heavy, especially where pricing's at right now. And the foreseeable future doesn't show a big change in that price. So it'd be hard for me to agree with that number as well.
Yeah.
All right, so let's talk a little bit about the situation we see right now with Iran. We've got the Strait of Hormuz closed. We've seen all these different ebbs and flows, big knee-jerk reactions across the board. When we start looking at what the price of oil's done, you see it run up one day, it'll come back down the next, and you've seen the same thing with the price of corn doing the same things reactive to that. As we got started recording, you were kind of talking a little bit about this. So you're feeling like there may be some settling of nerves here a little bit on some of the stuff. So I guess talk a little bit about that and how you see that working out.
Well, Iran needs friends. Everybody needs a friend, no matter what your personality or persuasion are, everybody needs friends. Can't do it alone. Iran has some friends. Russia's their friend. China's their friend. A few others are their friends, but those are the two key ones. Now, obviously, Russia is benefiting greatly from the rise in oil and wheat prices. I mean, they're just selling like they can't get enough out the door because obviously for them, they're bringing a ton of cash in and just filling up the coffers. So they're loving life at the same time. They have a cozy relationship with China, and China does not like this situation at all. They're very exposed to higher energy prices. They're very exposed to higher wheat prices. They're very exposed to, higher fertilizer prices and such. And so I think there has to be, I think it's okay for Russia to, fill up the bank account. At the same time, I don't think they can tell their buddy that they're counting on to buy their wheat, to buy their crude, to help them out militarily, that they're not going to help out in easing the Iranian situation. So whatever we're hearing publicly is what we're hearing publicly. But behind the scenes, Saudi Arabia, Iraq, China, Russia, there's talk, there's talks going on with whoever's in charge in Iran now, including ourselves and Israel. And I just think everyone just looked at everything and says, guys, we love you, we hate you. Long term, we're coming after you, but it doesn't do having half the world starve to death because we're going to keep the Strait of Hormuz shut to fertilizer and crude and other products is in no one's best interest, including Iran's best interest. And so I think what's been happening quietly behind the scenes is all of a sudden we're hearing about shipments going through the Strait of Hormuz, not totally open, but you're hearing that, there's some ships that are being let through. There's some flow going on. It's not completely shut down anymore. Trump's made many comments about their talks. They're getting closer. The war might be over soon. And then if you look at like the oil stocks, like Chevron, got hit really hard yesterday. Somebody knows for sure what's going to happen. I am not one of them. But in our markets, there's somebody that absolutely is involved in these conversations, and they know exactly what's going to happen. And a lot of times you see what they're doing in the stock market. You see what they're doing in the commodity markets, and you can get a sense for before the headlines actually tell you what's actually going to happen. They're telling you in advance what's going to happen. Crude oil almost down $10 a barrel from where it was a few days ago. Wheat coming down today. Precious metals rising, which have been going counter crude. The the big oil stocks, which obviously would know what's going on, selling off. Everything says to me that somehow there's been a brokering of at least a calming down phase, stability phase where we're just going to just calm things and let things happen and let things, move out a little bit and start talking more. And we got supposedly the China US meeting with Trump and Xi is still going to happen at the end of April. I just think markets are telling you that we're going to get an unwinding of the geopolitical trade here a little bit. And so you have to be wary of that. If you're a wheat farmer and you haven't sold much or you've been waiting to cash sell some wheat, I don't know how much premium is in the wheat market, Casey, based on geopolitics. You never know for sure until the tide goes out. But there's a fair geopolitical premium. If you haven't been selling into this rally, which we've been advocating to do so, you need to do that. You need to get enough cash sales on the books that if this thing really unravels and you give half the rally back because we all love each other again for a little while, you don't want to be caught having to sell, much lower price. You got to sell when the getting is good. We always talk in our reports and in our speeches, volatility goes both ways. You get up, you get down, and both sides get a chance to do something when there's fevered pitch. We just went to the upside fevered pitch. Great opportunity to get sales on the books. We just left the other side where everything was just flat on their back, just totally depressed. Farmer economy's in a depression. There's no hope, no future. Well, that you got to buy that. And we're going to be seeing this happen over and over and over. Overall, though, I think the trend is higher. I want to be very clear. I believe the trend is going higher, but still going to be a lot of ups and downs. And your job as a producer, end user, is to make sure when everyone's emotionally depressed, you buy, and when everyone's emotionally positive on the price like they have been, you got to sell. You got to sell good momentum. You got to buy bad momentum. It's just the way that's how you take advantage of the volatility, and the volatility does not take advantage of you. We cannot predict the next headline. We cannot do it. All we can do is react to what the market is giving us. And if it's giving us a price, winter wheat was under 5 and now it's over 6. You've got to book some sales. I mean, if you're not doing it, then I don't know what business you're in. I'm sorry. So,
Yep. You got to take advantage of the markets when you can, for sure. All right, let's jump over and talk a little bit real quickly on some of the weather stuff you see happening as we head into planting season here for the Midwest and the Corn Belt. As you're watching these things move along now, we've talked a little bit about some colder temperatures and those kind of things. We're having a little cool off down here where I'm at. But if you look to the east, they're still kind of going back and forth on some stuff. So I guess, Sean, as you're looking at this planting season, what are your expectations?
So there's two things that really drive my thinking here. The subsurface sea surface temperatures of the Central Pacific, not the surface, but just under the surface. The satellites can tell you what the temperatures are and what the distribution is. And it's just crazy warm just under the surface, meaning we have the feedstock for a major El Nino. Like, it's there. So if you have a small pool of warm water, you can only do so much, right? If it's a big warm pool. So the question isn't, is the warm water there? It is there. Like, it has that kind of warm water amount is typically associated with super El Ninos, those that are like, very, very strong El Nino developing. But you need the Southern Oscillation Index to move into negative territory. That means that the pressure differential from the west and the east has to be negative, where the winds reverse and go from west to east, and that allows that warm water to come to the surface. One thing that has been missing, at least through early March was that the Southern Oscillation Index remained very, very positive. That's a La Nina kind of thing that keeps the water down. It doesn't allow it to come up. So, but all of a sudden, in the last couple of weeks, we've seen a big negative. We've had negative readings now for 2 straight weeks. I think that's the first time we've seen 2 negative weeks in a couple of years. So we're starting to get this Southern Oscillation Index to start reversing the winds, and that means this big pool of warm water is going to come right up, and you're going to get a big, very significant surge in those sea surface temperatures. And it wouldn't surprise me if we're in a El Nino by the end of May, the way I'm thinking this through. And when you so what does that mean? Whenever you've had a La Nina going to El Nino, especially if it's moving to a super El Nino, it means, generally speaking, you're going to have a very good growing season for the in aggregate for the U.S. for row crops. Temperatures tend to be normal to below normal, no major heat. Rainfall is more than adequate. The only area that could get a little bit that may miss some of this rainfall is the western grain belt. Doesn't mean they don't get any rain. It means they won't catch up with the drought that they currently have, but they will get some rains. And it's not going to be 108 degrees in Nebraska. Like, we're not looking for that kind of weather this year.
Dang it. I was hoping for that, Sean.
Well, what I'm saying is, even though the rains aren't likely to break the drought in the West, if you don't have high heat, that still can allow the crop to come through. Doesn't mean best crop ever. Doesn't mean the crop's like you had last year. No. Does it mean below trend? Probably. Does it mean a crop disaster? Probably not. Crop disaster.
Good.
And so if you look at every single El Nino we've had, Casey, especially if it's a strong El Nino, I don't think there's a single example of not having a crop that is at least trend line, and oftentimes above trend line. So that's where we would expect to see that. And so the drought that we're seeing in the spring in the West that is getting the market worried, I understand it, and it could impact winter wheat, Casey, winter wheat for sure. It could impact some of the planting season progress. No question about it. I'm not discounting what it means to the West, but we should start seeing rainfall arrive even in those driest areas in May. And anytime, like last time I checked, as bad as the wheat crop can look, if you get May rains, it can look a hell of a lot better, just like that. And so, to me, yes, you can do some damage. Yes, top crop potential is not possible. But when you're dealing with wheat, which is essentially kind of a weed kind of a crop more than it is a plant kind of a crop, rains in May have saved the day many a time, and we think there's a good chance that will happen again. But we still got to get through a dry April with a chance for some frost risks before we get there. But after we get through April, I think it's going to be very, very difficult to get Mother Nature to excite the markets based upon U.S. weather. This type of an El Nino pattern is just not conducive to major weather problem risks in the marketplace for the U.S. weather.
Would that also contribute to greater snowfall in the mountains and stuff like that in the West in the wintertime?
Next winter, the winter that's coming. So, the West has had, I think it was one of the lowest snowfall years in 40 years or something like that.
Yeah.
It was awful. You're going to have a boom. If I was investing in the ski resorts, if they were publicly traded, I think some of them are. If I was publicly traded, it's not a stock recommendation. If I was publicly traded and a stock got hit because they had the worst ski season they've had in 40 years, I'd be buying the stocks right now because they're going to have an unbelievable long ski season coming up with huge snowpack. Skiing going well into the spring, starting early. The West is going to have a really fantastic winter, lots of moisture. So what has been the dearth that you've just experienced, you're going to get it all back this coming winter. That's the good news. This is not a multi-year affair like we saw a few years back where you had multiple years of just endless. That's not what we're dealing with here. We were dealing with a full recharge next winter, snowpack, top of the line, all the reservoirs getting filled back up again. Great runoff in the spring. We're not worried about Western drought persisting beyond, let's say, the summertime.
Good to hear, because it's really dry out here. So that this is going to be a rough drone season for folks.
It's going to be an issue, but at least if you don't get the high heat and you get some timely rains, it's not going to be a complete unmitigated disaster. It's not going to be great. You'd be wishing for better, but could be worse. And I guess you have to always try. I always try to look at the glass half full than half empty.
Sure.
The half full glass says, yes, the drought's not going to be eradicated. You are going to get some timely rains, but it's not going to be super hot, and you're still going to have a crop to sell at the end of harvest.
Good news. So what's this mean for like South America, Brazil, Argentina when we see this action up here? Because that's going to be a big indicator. If we have a huge crop in both places, then you've got a problem. So I guess what's that look like?
Well, you know that we've had a working theory. It's not a theory. It's other people's theories, but strong working theory about the correlation between Amazon deforestation and why precipitation in the central northern Brazil have been off by 50% in the last decade. Something that's really never happened in recorded times. Maybe it happened 1,000 years ago, but we don't have any recordings of it. Okay. And I think the real, and we remember they had rainforest kind of rains a decade ago. So even though the rain is down by half, they still have gotten enough timely rains to produce good crops. But we're at a level where any further suppression, Casey, below any further reduction, it's not enough. Like you're going to get an exponential decline in yields. Like we're at the marginal line, for lack of a better term, line in the sand. And so this growing season is a real test. Are we at the bottom of this Amazon effect? Because right now, if you look at the trend lines, it doesn't show that it's still showing that we're heading down. We haven't seen a stabilization yet. And a strong El Nino historically means very hot, dry weather for central northern Brazil normally. Okay. That's the normal teleconnection. Can we see another level down, another notch below to where we have insufficient rains for the central northern grain belt or not? This is the test for this theory about the Amazon. Have we reached the trough of the Amazon effect, or is it going to show another rung down? Really, really important to monitor September 15th onward, which really begins the growing season, to see how this plays out. Either way, it's going to be a warm, dry growing season for them. In both the first half of the growing season and the second half are both going to be hot and dry. The question is for soybeans, because we during 23, the last El Nino they had a very hot, dry. In fact, it was the hottest and driest growing season they've ever had. And soybeans were off. I mean, it wasn't a major crop problem, but they were off, I think, 10% off what it could have been. And that was them. And that was from them planting 4% more acres, by the way. So worst case, we're going to see that. Okay. I think we could see something considerably more impactful than that. So if the second half of the growing season, in my opinion, and we've seen this, we don't need the Amazon to be in trouble. It's lights out for the corn market, corn production, lights out. Like I think major crop problem for second crop corn, because we plant in February and we move into the dry season normally, and this pattern has proven dreadful for corn production in the past. Even when the Amazon was in better shape, if the Amazon's in worse shape as it is, I mean, I really think the corn crop, soybeans, we'll have to see if it's just a 10% deal with that. But I mean, corn production will be down 30% next spring.
Okay.
Big. So
Big. Yeah.
I guess the way I'm looking at it, taking geopolitics off the equation, Casey, we're going to have to trade the U.S. crop. And what does that mean? It means we're going to make an August low of some sort. I don't think we'll be as low as last year. Last year was higher than the year before in August, but we seem to keep making August lows. We used to make September lows, but it doesn't look like we do that anymore. We make August lows now. So I would expect August to be another important low, final low. And then from that point forward, then the Brazilian weather situation takes hold. And then next year, we're going to be moving back into neutral La Nina. And then we can have a major drought in the U.S., a major drought in the U.S. Understand that this growing season overseas, India is set up for a major drought. China is set up for a major drought this growing season. And so usually the market will start reacting to droughts in India and China at the tail end of the growing season or into the fall, when they can get a better assessment of it. And then they start seeing whether China's going to start purchasing more stuff because they don't like what they're seeing. And all indications are, with an El Nino really rocking and rolling, very wet growing harvest season for the U.S. Slow, a lot of dry down costs, unfortunately, and a lot of quality problems. That's going to be bullish for the marketplace. That's going to be a bullish. So my feeling is we're making some highs here in the spring. I don't know what's going to happen with the Z meeting. Maybe we expand the purchases. That they say we're going to buy some corn, we're going to buy some cotton. Maybe we have one more surge in May on China trade expansion. It's possible, but it's going to be very hard for the market to go higher after May with a good U.S. growing season until we digest the crop by August. It's going to be very difficult unless we get $150, $200 barrel oil, and then all bets are off, obviously, if that happens. I can't predict that. I don't know if that's going to happen, but I'm going to go with the weather driving the market price action more so than the geopolitics. Now that I think we're in an ebbing phase, and I think the market's going to be paying much more attention to what it traditionally does, which is weather here in the U.S.
Yep. All right, good stuff as usual, Sean. Folks want to reach out to you, get more information about what you're doing over at Hackett Financial. What's the best way to do that?
Website is Hackett, Hackett, advisors.com. We're fairly active on our Twitter page at Faradix11. Do some posts on our LinkedIn page as well, so they can check us out there on some of our latest thoughts on how we use cycle statistics and correlations to help make price forecasts and help producers, buy inputs and sell their production at better times of the year to maximize their income. So
right on. Sean, you do a lot of speaking throughout the year. If folks want to have you come speak at their event, what's the best way to do that?
The best way to do that is to go to AG Speakers Network. I'm one of their featured speakers. They can either call over there or they can click on my speaker page and put an email request. But going to agspeakersnetwork.com is the best place if they want to hire me to speak at one of their conferences, which I do often, as you know.
Okay. Sean spoke at several of my Moving Iron Summits, and he's never left the stage without people going, wow, what do we do next here? Because Sean's got a very contrarian thought process, as you guys know from listening to the podcast, and it gets people thinking about what he's doing. The good thing about Sean is it's not pie in the sky. He has tons of data to back up what he's talking about. So highly recommend him if you guys want to have him come speak.
Just as an aside, not that I'm trying to pump my speaker deal at all, but other than to say that one of the key features of what I've talked about for several years is the increase in the geopolitical instability war cycle really starting to kick in 2026 and crescendoing in 2028. And here we are in 2026. The geopolitics is accelerating exactly as the long-term cycles that we showed at these meetings, which has always been highly inflationary to commodities. Because of that cycle, we do not believe that the Iran war is the end. It's just the beginning of something much bigger. Not that I'm excited about that, other than to say that that's one of the big it's going to continue to be one of the big drivers for commodities And you have to pay attention to those factors because it's not just going to be weather on this cycle. It's going to be a lot of geopolitical factors, and you have to know how to handle it to maximize that income on the farm. And that's something that we talk about often. It's not just weather, it's many other factors that we have found create ups and downs and sideways patterns for markets over 1,000-year period. So
right on. Well, Sean, I appreciate you being on the podcast. We'll catch you again next time. I can't stress you guys enough. If you want to have Sean come speak at your event, your people love it. Have him come check that out. So, Sean, appreciate you being on the podcast. We'll catch you again next time.
Sounds good, Casey. Have a happy Easter.
You too, man. Stay tuned for Moving Iron podcast after these messages.
Farm Journal TV brings together the best in ag news and rural storytelling from the field to the kitchen table. Stream full episodes and podcasts anytime. Start your 14-day free trial today.
All right, welcome back to Moving Iron podcast. I got Rich Poston on talk about what's going on in the economy, and I'd like to have Rich, typically by himself here, but I figure with all the stuff that we see going on in the world right now, with all the different economics involved here with oil and different stock market things, I thought it was a good time to bring him back on. So, Rich, appreciate you being on the podcast.
Thank you.
Before we get started, Rich, talk a little bit about your podcast where people can find that at.
Yeah, they should go to criticalpointpod.com and you'll find some unlocked or free videos, but take a stab at the locked ones because they give you a 60-day free trial. And what I offer is like a morning brief for a few minutes every morning, except Thursdays. On Thursdays, it's weekly updates for the grain markets, and then separately is an update for the stock market, economy, Bitcoin, gold, oil, interest rates. So that can be a lengthy one sometimes on Thursday because I look at everything from very short term to long term. My model's tracking things by the minute, by the week, hour, okay, years. And so I help a lot of different types of traders, investors from anything from short term to very long term. And on the long term, I even get businesses who've recognized the stock market can kind of give a clue where the economy is going. It's an important indicator by itself. So I get business people that are just trying to get a handle on the economy for business planning, not so much how they're going to invest. So a lot of different customers, members, subscribers, and a very interesting group of people. So yeah, get on board.
Okay. All right. So let's talk a little bit about what's going on out there. Highly recommend you, by the way, listen to Rich's stuff. There's a lot of good insights there. Let's talk about what's going on. So we got the whole Strait of Hormuz thing shut down. 10 or 20% of the world's oil goes through that strait and energy. It's not so much the amount of that comes through there, but it's where it goes, right? So China gets a lot of oil out of there, and they're highly susceptible to higher interest or higher energy prices and those kind of things. And it's just kind of like that whole, eastern half of the globe, all the oil, that's where the biggest chunk of that oil goes. So there's some big strains there right now. As you look at how crude oil is affecting the marketplace right now, again, a lot of volatility in the marketplace right now. You watch the stock market one day, it's off 500 points and it's up 350 the next. I mean, so it's just all over the place. A lot of it is because of uncertainty, right? You don't know. One day we're having peace talks, the next day we're going to go blow up salination plants. I mean, it's so it's just all these different things or crazy things are happening, right? As you're watching this stuff unfold, Rich, it feels like this particular scenario is a little bit different than past scenarios that we've had in the area. And maybe it's just because there's more news coverage now and there's 150 different podcasts that are covering all this stuff. And I mean, all these different things are going on, but it just feels like the world's on pins and needles right now, more so than it's been in the past. And you start looking at where crude oil falls in that mix and how it affects the economy and PMIs and all this different stuff that are falling into place there. Rich, as you're trying to decipher your way through this, I mean, help me understand what's going on in the world right now.
Yeah. In terms of the oil versus the economy, before just like a day or two before the war actually started, I decided if it goes to $108, that would be an upside target for me, even though I was hopeful 85 would cap it. Well, it didn't happen. It went right to 108 and then beyond, a little above that, and then backed off. About that time as well, I saw some research by some people saying if it goes to 108, I thought that was interesting. It came up with the same number. It goes to 108. They said the economy goes to minus 0.5% GDP. That wouldn't necessarily mean a recession, but boy, it would be scary. Like, okay, a recession, that's the next step, you know. Don't know as we've seen that yet with that when it went above 108. It may be more of a time thing. How long does it stay up there? But if it wants to go higher, I'm looking at 123, 136, 153. I understand some people using 170, 180, 200. It's all feasible. But, if we could ever stop this Iran thing in the next few weeks, we'd have a chance that it'll take months to recover to full production and full distribution around the world. But I think it would cap it. And here's what I'm looking at on business cycle. Really, I was already bullish oil a few months ago before the war, saying oil ought to move higher into 2027, but it shouldn't move up much, but it ought to move higher. And when you make a forecast like that, you also have to entertain the bullish news might become even more bullish along the way. Well, we got it. The Iran war come in, the market exploded. What's interesting is I wouldn't be surprised that we've seen the highest price from now into next year. And when we get that cyclical top, in theory, it should be higher than now. But I'm asking, well, what else can go wrong? If we can fix the Iran war, why would you turn around and just do it again, which is about the only reason to take it higher months down the road or year down the road? So I'm a little suspicious that, the cycle's been distorted by this Iran war by simply running things up sooner, much higher, faster than what would normally occur. So I wouldn't be surprised the market does erode into next year, but it's not going back to 60, 65 because the normal business cycle is still going to provide some support, hold it up. What this tells me is our average price from now to next year probably going to work a little higher for a while, for a few months at least, and it'll probably level off. It won't go as high as whatever the highest price is this year, but it might be up enough that we just see this trickle through inflationary effect. Because when oil makes a strong move, it impacts almost everything in an economy if it's going to last for quite a while. There's an analyst over in India, oil analyst, and he used to trade actual oil. And he was saying, well, except for the vegetables you're growing in your backyard, this oil is going to make everything more expensive, all right? And he was also concerned for India, saying their currency is set up so it's making the oil even more expensive than the actual oil price going up. So India's been hit. Their stock market has just been smacked. If it goes just a little bit lower, it's going to wipe out what should have been a bull market for India. So I'm hopeful something holds for them. They have an excellent track record for a very good stock market over the past 10 years. But this is a pretty bad setback on their stock market. So it is trickling around the world. People are nervous, worried about it. It's just a matter how soon can we fix things. And the problem is, they've destroyed some of the infrastructure over there. So it could take several months to really get that production back. Now, here's another economic thing I think we should consider. Dr. Stephen King, I was on one of his podcasts here. I wasn't on, I was just listening to it. But he was showing with his personal customized software he's developed for charting and analyzing. It's called Ravel. And he was showing the relationship to oil more on the production side, the size of the oil business, relative to GDP, the size of the U.S. economy. And what he was showing is there's a one-to-one relationship. So he says, if you're knocking oil production down 10%, you're probably knocking the economy down 10%. So I thought, oh my gosh, that fits with some of the other people just before the war that said we could have a minus GDP off of $100 oil. And we're hovering around 108, doing a pretty good job staying there, more on the European oil, the Brent oil. But these are things we got to be concerned about for the rest of this year, that there's, even if the stock market wants to go higher, and as of this morning, I'm feeling a little bit optimistic it can, I feel like there's just headwinds all year long here because we got the midterm elections. We've got all these economic indicators we can talk about in a moment. But I want to think that things could be optimistic this year yet, but there's going to be headwinds. I don't think it's going to be a glorious time for the economy and American people or the stock market. All right. But I can be, as of this morning, optimistic. I may change my mind in the next 30 minutes, but we'll see here. At any rate, on that oil, yes, oil is still very important, even though we're using less and less oil. And it is different than the 1970s oil crunch because of the alternative energy. Plus, we're more efficient of how we use oil. But nevertheless, it's still ranking up there as a very important thing to consider relative to the U.S. economy. So here's hopeful. We've seen the highest price, but I'm telling people, I don't think it's going to like take a nosedive and go all the way back to the bottom. I don't think we can fix things that fast. And I think it'll be a slow erosion. And the problem is you and I at the store won't see that erosion. It's like,
never see the erosion.
Yeah, everything's going to go up anyways. Some of the companies are already saying they're getting ready to raise prices, and I'm not talking about the gas pump, that's already up. But as far as everything else, this is gonna trickle through and be at least a headwind for us. And so with that, I'd like to take it into the PMIs if you want. We got some PMIs this morning for U.S. manufacturing, Eurozone. Now, PMIs, it's a monthly indicator. It comes out of what are the procurement managers doing, thinking, what do they think about their business, but also some actual facts. Is their business doing well? So it's kind of like a forecasting, a mood kind of indicator, and then what is business really doing all wrapped up into an indicator. And if you could subscribe to their services, they'll give you all these details so you can really use it in your business. For most of us, we just look at the number as a whole and say, is that good or bad? Because it runs a high positive correlation with GDP percent. So in theory, if the PMIs are going lower, they drop below 50, your economy is backing off and you may be headed towards recession. If it's above 50, your economy is growing, and the more it's above 50, then the faster the pace growing economy. Well, this morning, the U.S. manufacturing, it's so-so. It's recovered. It's had a tough time for 2 or 3 years now. It's above 50. Bit struggling, though, okay? The interesting thing is I look at Eurozone. They had been more negative than U.S. in the past few years. It's actually looking pretty good. I got to do some work of when is it going to stop going up. But I think it just recently put in what I call a kitchen business cycle discovered by Mr. Kitchen. It's about a 3 to 4 year pattern of the economy throttling up and down, but also business and stock market and commodity markets. We can find these patterns. It does relate to prices as well. And it may be the Eurozone is setting up to have a fairly decent year in manufacturing and next year. And I think that could mean their stock market that's been beating the U.S. stock market for a year now may still be one of the leaders here. I'm rather optimistic, even though they took quite a hit off this oil thing. Some of them, like Norway, have made money out of the oil thing, so their stock market's like that. Okay, it's doing very well. But Portugal, Spain, looking good to me. Even Canada's looking good to me. Mexico, believe it or not, taking a hit, and Trump trying to beat up on them. The stock market is turned up nicely this week. I think those markets can do better here. It's just, unfortunately, with how these geopolitics are going in our own politics relative to our business, we have to be ready to sell at any moment when someone actually gives us some other bad news or crazy news, right? But I'm optimistic for some of these PMIs to improve this year. But at the same time, when I look at long-term trends, a lot of these business statistics, the economy has been going south since last July. And I was on vacation, but made a business trip out of it as well in terms of economic research. And I traveled 4 states. And I come home and I told my wife was with me, and I just said, do you get the impression people that are running these stores and these parks, they're rather pessimistic. Things aren't doing good. And she said, yeah, I saw the same thing. By the time we got back to the office, the economic data was coming in. And even today, you could see the PMIs, some of them topped in July. And so I'm concerned the trend for the economy is still down into next year. And that also relates to what I call the Benner cycle of the economy. And that was by Samuel Benner in the 1800s, a farmer who was very successful in trading stock market, commodity markets, figuring out the economy. And he discovered some cycles. And on the internet in the past few months, there's been a chart of some of Benner's cycles, and it showed a top in 2026 and then downhill. And so we have to, I could see the timing might be a little bit off here, but we do have to be concerned of a slower economy into next year. And we have to be concerned of rising inflation, which I think will continue to rise into late this year, maybe next year. I still don't know, is it going to explode off of this oil business, or is it going to explode because companies just get greedy and trying to make money anywhere and everywhere as they can? And that is a weakness, a problem with our capitalistic system, why I continue to believe our system is burning out and going to die someday. Businesses just automatically, if they look at their every week, are we making more and more profit every single week? Businesses 100 years ago, all they asked was, did we make money this year? They never expected to go up every single month. This is distorting our business cycles, and it's just hammering the consumers, mostly the middle class and poor, which, by the way, have gone downhill since 1980, more so since 2000. And the middle class grew from 6% of the population in the year 1800 to 70% in 1970. It's gone downhill ever since. So we know we're not on the right economic system for the middle class. The poor have a safety net, so it's not so much there. But the rich, of course, have won. All right, they did well since the 1980s. And so we have that inequality going on there, mixing in with all this day-to-day stuff here of trying to figure out where we're going. My thoughts is if stock market goes higher this year, there's going to be some headwinds. And the economy is still going to go downhill. And yes, the stock market can go up for a long time, even while the economy is going downhill. But I suspect at least by next year, stock market is going to have a day of reckoning of saying, oops, economy really hasn't been getting anywhere, has it? So we want to watch out for those things as well. So I want some more PMI information. Later this week, we'll get the composite and services industries, and that'll give us a better clue of where we're going on for the economy. But I would say the U.S. is heading south into next year, at least somewhat. I'm not saying we're going to fall in recession, but it just worries me a bit, okay? Whereas I look at Europe, I look at pockets of the other world, I think they could do a little better, actually, than us. China, granted, they buy a lot of oil, but they've been doing so well on the solar panels, the wind. They have built their reserves oil better than most other countries. They could get by and not have a problem like everyone else. Whereas India, they don't have the reserves. They got to buy it. So they've got a problem. Okay. Europe, really, this oil thing is not quite as big an impact as I would have thought. It's really more of the gas. The LNG can really impact them big time. That stuff is not coming out of the strait over there near Iran. So, yeah, I will definitely leave the door open for higher oil prices, but it wouldn't surprise me if we've seen the highest. I'm just saying, I don't think they're going to back off fast enough to really help us. I think we've got some lingering problems in coming months. Even if the stock market goes higher, you and I are going to have problems. Okay.
All the same. It makes you think about this. So you go back to 2008, price of oil got up to like $150 or whatever it was during that time frame. We saw $4 and $5 at the gas pump, and even when the price of fuel came down to $50-$60 a barrel on the oil side, the price of fuel really only came down about $1 from that all-time high.
Yeah.
Right.
Yeah.
So if you go back and look at last time price of oil was at $60 a barrel, it was well below. It was like $1.50 a gallon. You know what I mean? So it's this. The point that you and I have talked about on here several times is that when a price gets to a certain number, it rarely goes back to what it was the last time the input cost was the same as it was. You know what I mean? So the cost of production and everything relatively stay close to the same, right? Rarely does the price come back down to where it was. And that's the one thing is you look at what's going on now in the marketplace. We're setting ourselves up for huge numbers again, right? As we set through this, and it's going to, just like you talked about, you're going to see this pain, and it's just going to be there now. That's going to become the new normal. And it's amazing to me, and I'm as guilty as anybody else is. You see $3.50 at the gas pump today, you're like, oh, that's good. Look at that. Good solid number right there. 5 or 6 years ago, that $3.50 would have been like, what is going on? So like, it's amazing how numb we get to pricing, right? And how much it affects what we see going on. And the thing about that is, these prices keep going up, but the cost, wages don't seem to follow the same pattern. And I think that's the real issue we see now. So when you're looking at that part of it, Rich, how you see in that part of the economy, work out as far as you see wages to price increases, those kind of things? How do you see that playing out?
Yeah, first of all, that numbness really gets into behavioral economics, which is different than the standard economist. And you can actually be more accurate if you can mix in behavioral. But most economists are kind of stubborn. They don't know how to analyze things from a mentality approach and what is the consumer really feeling. Okay. In terms of wages, I think it's going to be a struggle to take wages higher here. And I think we're going to, if you earn a wage, you're going to get pinched now into next year with this rising inflation. And, I think the years ago when we started down this more conservative trickle-down economics, pro-capitalism thing, I think they thought people might get pinched on their wage side with all this competitive on the wage side, but they'll make money in the stock market and they'll feel better. Well, that worked for a while, but today people, they don't have the money to put in the stock market. And the stock market gets higher and higher price, so you have to buy less and less shares. How do you get anything back? And if it's locked in your retirement account, how do you get anything back unless you're going to pay a penalty and pay a tax? So the bottom line is this whole wage thing is so screwed up. And I've learned some guy beat up on me a little bit because I was really beating up on the U.S. and praising some of these other countries like Norway and some of them that are a little more socialistic. And then he come back and he correctly pointed out they have their issues too. Things are just getting more and more expensive around the world and the wages aren't keeping up. The whole world is kind of on the same path. It's just some of us are a little more aggressive than others. It is something that has to be dealt with someday. I mean, it's just getting too out of hand and people are catching on. Every day they're hearing how much more money Musk and all these others are making. And they're saying, my gosh, how much money do you need?
Oh yeah.
And they're starting to think, well, where's my share? And this is what I really love. Oh, by the way, I put out 4 videos, 3 of them on civilization, generation, stock market, but a lot about how we behave. What is our economy doing? And then the 4th video is on how our money system works. It's MMT, and they're about 10 to 13 minutes each. So I kept it as brief as possible. But if you go on my website, criticalpointpod.com, on the left-hand side, look for blog. Click on blog. You'll see a little window there that talks about civilizations. Click on that. You'll see a list of the 4 videos. Go take a look at those. I also put them on LinkedIn and some of the other social media stuff. But take a look at those videos because I'm very convinced the middle class did very well from the start of this country right in the 1970s. 1970s, we allowed health insurance companies to finally make a profit. They'd been nonprofit. That was a sign of what was to come of a war on the middle class. I think we're in the Great Repression and Great Depression for the middle class. It's just not a depression like anything in the history books because the rich are actually still getting richer. But 1980, the symbol was the election Reagan and the whole revolution. And you know what? In the 1980s, 1990s, the middle class actually did make something out of that at the start of that. And they were very optimistic. They were very humble. They gave the system a chance. And they got happier and happier right to 2000. And then from 2000 to now, it's just slid right downhill. It didn't matter if it was a Democrat president or a Republican, didn't matter. We've just slid right down in the gutter where we're the least happy, or actually just very unhappy is what we really are. What happened? Well, we woke up from 2000 to now. That system just is not helping the middle class, not getting a fair share. And for business people, if you take the real small businesses, the individual farms, the stores in the towns, they're right in with the middle class, even if they have made some decent money. They've got their own problems and issues. It's just not working. If you're not big business, you're not in the game. You're not winning. If you're not in the rich class, you're not winning. And frankly, I don't think we can go much longer. I think something's going to crash and burn in the next 5 years here. And then we'll calm down and say, okay. And here's some people, they'll push back on me saying, yeah, but because I'm in favor of high taxes on the rich. And they'll say, nah, that didn't work. Oh, yes, it did. From 1940s to 1970s, 70, 90% tax rates. And you know what? The economy grew 4%. We lowered the taxes to the rich. Guess what? Our economy grows 2.8%. That's like driving your car down the road at 60 miles an hour and you're dropping 40,
Right.
It just...
Well, the thing about what you're talking about there on the rich, that during that time frame, yeah, there was huge, very high tax rates on the rich, but there were also an incredible amount of tax deductions associated with that. So as rich people put their money back into the marketplace, building businesses and so on and so forth, employing people, those kind of things, they had an incredible amount of tax write-offs to where it actually offset almost all the taxes they would have to pay anyway.
Absolutely. President Eisenhower, Republican president, right? He said he loved high taxes. He was running 70 or 90%. If you look at his quotes, he just mentions it gets people off their butts, gets the business going. They get out and do stuff. Well, why was that? He didn't mention the tax deductions,
Yeah.
He was saying you could do it both ways. And this is my attitude lately too, that I think the government should say, fix this or we'll fix it for you. Your choice.
Right.
And really that was what was going on back then, because if you did not want to expand your business, you paid the 70 or 90% tax. But if you wanted to expand your business and do things, get out there and get rolling, you didn't have to pay hardly anything. Okay. It just depends how aggressive you want it. Now, here's the thing. You might say, well, that's still not the best way of to pushing people around. But why did the economy grow 4%? I'd love to see 4%. Anybody would like to see 4% right today. And, and to me, you just look at that 40, 70s thinking, my gosh, that was better than what I thought through all the history. And then, with that economic growth, you could see you could still get rich. That's what people forget. You could still get rich and richer. It just wasn't as many, as we have today. And you could just see the middle class, the population is going downhill. And then you look at what is the share of the economy for the middle class. It's going downhill at a faster pace.
Yeah.
So, it's very, very frustrating the more I dig into this stuff, because unfortunately this stuff is so long-term and so much of a process that I can see things could get worse before we get better. It could be a while yet. And then I sat back and look at that stock market and thinking, boy, it just does not give a darn about anybody, about itself. Right. Yeah. And I don't know, I'll stick my idea. We got a day of reckoning coming in the next 5 years. Yeah. And it's probably a good thing. I'm forecasting, like some people say, well, we're going to have a 1929 crash. Well, it's interesting. Some things point to that, but I doubt it. The way our system runs today, I would say no more than 60%, but that's bad enough. But some days I feel like saying, yeah, I wish it would crash 90% just to straighten things out. But unfortunately, at the same time, I say, well, let's not get that carried away. What's sad is if we just come together a bit. We don't need bad times to fix this. We see enough evidence how we can get this stuff done here. And it's like, I just don't get it. Both the Democrats and Republicans seem to be stuck in a rut. They just can't get out of it and see we already got the tools. We already got the system to correct all this. So here's hopeful the Gen Zers and millennials come on board, because they're underrepresented in Congress, but they're waking up to it. And hopefully my baby boomers, that's and low end of that generation, and Gen Xers, we're seeing some evidence, people changing here, turning, saying, this isn't really working. This isn't what we signed up for. And it's certainly that's not what we voted for.
Well, it's easy to see it, right? I mean, I can tell you that I keep hearing how great the economy is, but we're in a little rough patch right now. And this inflationary period that we've been in, it's not like it started at COVID, right? It's been going on forever, right? I mean, it's just every, we gotta add 3% to this, 3% to that, and next thing you know, we're at now. Did COVID really shine a light on it? Yeah, absolutely, right? I mean, you pump a bunch of money out in the marketplace, and you have more dollars than you do goods to offset that, and you get an incredible inflationary spike. But I go tell you this much. I don't do the grocery shopping at my house. My wife does, because she's way more disciplined in what she puts in the cart than what I would be. And so she, as we walked, as the other Friday night, we didn't have anything going on, so we just went to the grocery store to get their groceries. And I was just walking around just looking at prices, and I'm like, I can't believe how much it is for a pound of hamburger, a pork chop, a gallon of milk, so you start adding those things up, and, you get a half a basket full of groceries, and you got $200 worth of groceries, right? And I remember when I was a kid, $200 worth of groceries were 2 entire grocery carts full, heaped to the mountain, as high as you could get it. And that was $200 worth of groceries. And today, I mean, it wasn't that long ago, we would go to like Costco, and we would do this every so often, go to Costco and we get kind of, all the stuff you're going to need for summer, right? You get the plastic cups and the plates and this, that, and the other stuff and blah, blah, blah. And last time we did that was $1,000. You know what I mean? I was just like,
yeah.
Holy crap, we spent $1,000 on stuff that, we didn't really get that much stuff for $1,000, So, I mean, it's just, you start looking at this stuff, and to your point, it's hard to sit there and look at someone that makes a family that makes, growing up, $60,000 or $80,000 a year was a massive amount of money. Today, you look at a family that makes $60,000 or $80,000, you wonder how they're doing it.
Yeah, absolutely.
And it's just so I'm kind of with you on that. There's going to be a point in time when we've got to figure things out, and offshore like you talk about, up to the 70s, you can point to the 80s is kind of when offshore manufacturing started to take place and move things out, and we start moving things in. But now we're talking about all these kids and stuff that need to come back into the United States and go into the trades and this, that, and other thing. But I read an interesting statistic the other day, Rich, that there's 5 million manufacturing jobs they can't fill right now in the United States.
Yeah.
And I'm like, well, I didn't think we had any manufacturing in the United States. If we brought up what, now we have all this manufacturing, and we're 5 million people less than we need to have, but which are going to be really good paying jobs, by the way, for the most part, in those things. I hear people complaining about it. At the same time, there's all these high skilled jobs that people just have. I mean, we're talking like 9 months from now, you can be making really good money as an electrician, right? Mm-hmm. Those are the kind of things I look at, and I'm like, where is the disconnect at in putting, I'm not happy with the situation that I'm in, to, hey, here we go. Here's a great opportunity that I need to spend 9 months of my life. Now, granted, I understand that there's all kinds of things that go along. You can't just stop what you're doing for 9 months and go to school, but there's plenty of night programs out there that you can do those kind of things through. So you would think that there'd be a bigger push into these different places, but as much as I feel the pain of the middle class folks and those kind of things, I also look at some of the situations and I wonder why are not more people taking advantage of these situations that are out there? And that's some of the dilemma that I kind of fall into the mix of.
Some of this is, I think people are so fascinated with the apps on their phone and this high tech stuff. Those are the kind of jobs they want. So as soon as they hear a manufacturer say, "Oh, you mean I'm making sneakers?" No, that's not for me. Well, yeah, but if you're falling behind in life, maybe you have to do that for a while. Then again, maybe it's not, there's other things that are manufacturing, and even the high tech has to be manufactured somewhere, and some of that's coming back here too.
Yeah.
So there's a little bit of that kind of feeling going on there, I think, where it's going to take them a while to wake up and adjust to what is a good career,
Yeah.
I see that too. I think it's like a delayed reaction here. So.
And to your point, I started messing with some of these different AI engines and those kind of things where you simply start asking the questions and it starts spitting stuff out to you, right? And if I'm a software developer or a coder or anything like that, I'm scared to death of my career path, right?
Yeah.
I mean, and that's the other thing too. On the other side of the economy side of that is, one day AI is going to is the best thing since sliced bread, and the next day it's the Death Star to civilization.
Yes.
Right? Because so many things are AI driven now that it's like a .com bubble feel to it. You know what I mean? And now but you're shaping everything into that, so it's hard to see which way to go. But I can tell you right now that AI is not going to come make your sneakers for you, and AI is not going to run your wire for your house, and it's not going to plumb your house, and it's not going to weld the ships that are out in the shipyard and those kind of things. Like, so those kind of things, as you look at things, how they move forward. I guess from your civilization perspective, I mean, this is probably a good question to ask you. As you look at these huge leaps in technology and civilization, right? When you go from like the horse to the car, the automobile, and you go from in agriculture, you go from horse-drawn plows to introduction of tractors and those kind of things into the mix. You start looking at how computing started going into sciences and those kind of things. Those huge leaps in technology that we saw throughout history. One of the things that is interesting is the folks that adopt to that technology tend to come out on the other side faster, right? That's not a big thing there. But this particular leap in technology it's civilization changing technology, right? It's not just, oh, cool, now we got a wheel so we can pull a car faster, right? We don't have to drag something that rolls now, right? Oh, hey, cool, we can go from, going 20 miles a day on a horse to, hey, we can go, 100 miles a day in a very early vehicle, right? As long as you got fuel to keep going and it doesn't break down, you can just keep going perpetually, right? This is way different, right? This technological leap, not only is it driving how people interact with it, but it's predicting the economy, right? I mean, you build an algorithm going, hey, if these things happen, do this. If this does that, do that.
Yep.
But it's doing it at such a rapid pace. I read something today. They've built some stuff where it's make 80,000 decisions in a second. I mean, I don't know how that's even possible, but as you look at like quantum computing and all these different things and how that changes stuff, I think to your point, that 5-year period that you're talking about down the road, it's a day of reckoning that has a lot to do with the technology that you see in front of us. And I mean, is some of your studies of civilization? Can you talk a little bit about that?
Well, yeah, the civilization from 2000 and now we're in what we call the crisis phase, and it's the fourth generation, a series of 4 generations, 1 and 2, and we're 1940s, 70s. They built the U.S. economy, become the leader of the world, right? And they took care of themselves. They took care of business and people. It wasn't an anti-business thing, but they made sure business didn't run away with everything. But when you get to generation 3, which is 1980s, 90s, basically it was just get rich. It's all about money. If you make cheese and you grow soybeans, you make cars, you don't matter. Just keep making them. It's the guy at the top of the company that's making the money off those things, and he makes even more money from the money, so he becomes more important than you. And it was a sad turn, but it actually did pretty good, making money and growing the economy. Then you get to generation 4, and that's when everybody just says, I'm sick of everything. I don't understand anything, and I don't want to. It really is sad that we get into I don't want to think about it. Let somebody else think about it. Well, that means somebody, even a single person, can run your life and run your country. If you're going to do that, you got to get involved and think and be part of that. So I'm very convinced this dates back to 1780s, 1790s, where this country is dying. And my friends keep saying, don't use that word. Nobody's going to listen to you if you say death, But that's all I can think of. But the good news is we're going to go through rebirth. Something's happening in the next 20 years that we're going to put this.
It's not dying in the sense that we're going to cease to exist. It's just
right. It's just it's the most important
broken enough.
change.
We're going to fix them back to change something new. Right.
And that's back in the 2010s. I started writing saying, hey, with all this high tech, I wasn't thinking about AI back then when it was still developing. It was there. But I just said, all this super high tech and the coming robots, I said, if we don't learn how to handle this can be a hell on earth or it can be a heaven on earth. And I'm a little concerned we might go through the hell first, and where we could actually skip the hell if we'd wake up here in the next few years and say, okay, AI is here. We can't stop it. We'd love to put it back in the box, but it's here. How do we deal with that? How do we make money out of that for the middle class? Because again, I view the poor, I don't want to forget the poor, but the way I look at the poor, we can set a safety net and tie it to the middle class, right? So it's really the middle class. That's still, even though we're losing middle class people, the middle class is still the largest portion of this population. And we're not taking care of them. Okay. Healthcare is killing us, and this is killing us. And the money's just going right straight up. And the poor get a safety net, but the inflation's killing them too. All right. Mm-hmm. So it's not that good a safety net. It's really something how the more I study this, how we worked our way into this. And it's fascinating to me. You got very intelligent people that they can't see it, or they see it and it's like they just won't do anything about it. And this is where, even though I can talk maybe a little too much anti-Trump, really, in a way, it's a blessing of burning down the house here, the sense that it's going to fire us up saying, okay, we get to start all over again. What kind of country do we want? And all I beg the American people is consider, why not start focusing on the middle class more? Even if it hurts the rich a bit, why not focus on the middle class? I don't have greater detail. I mean, I have a lot of little government programs I think we should run and tax stuff. But, if I could just get the people to say, what do we need as a middle class? What do we want? I think the biggest answer anybody wants, by the way, any politician listening out there, if you want to get elected, you better think money, money, money for the middle class. Okay. Right. That's a great starting point. You can always adjust that later. Okay. But yeah, I'm using AI to help find a new word to describe myself, because I want to be some kind of pro middle class economy type person. I really think that can bring a very nice time in the next 20 years. And we just got to get to work on it. And there's some people, God bless them, are trying, but it's still not the bulk of the population, especially in Washington, D.C., and too much talk, not enough action yet in that regards.
Yep. Well, you got to remember, Rich, that the politicians are given money by people that have their interests in mind. And I would say what you just said, burn down the house is probably a pretty good term when the people that are running the country don't even follow the same laws that everybody else does. That's why you have people that make $80 million a year in tax in trading and those kind of things. Everyone has to live by the same set of rules, right?
Yeah.
And if you and I did what they did, we'd all be in jail. Right.
Yeah. Yeah. It's hey, I grew up on farms first, and home farms and managed farms. Then I went into trading commodities, and I love trading. Okay. And I do it in the stock market, and I do long-term investing as well. And to me, in the early days, I thought trading was a big, helpful thing to the economy. You know something today? I don't think trading helps the economy one bit. Okay. And that money just floats around in Banker Street, Wall Street, and the rich. It just doesn't make the impact, at least it used to. Okay, I'd like to think it used to, but yeah, it's like we do a whole lot of business that doesn't really amount to business for the American people, the country. It's strange, and upsetting.
It's a casino, Rich.
Yeah,
casino.
It is. It's the financialization started in 1982, or if it was already there, then it surged. And you could just see everything's about the money. Like I say, the guy making the cheese and growing the soybeans. Obviously that company is selling those things, but it's like, it doesn't really matter. All that matters is that money up there with the CEO and the big executives, and they can go out and make more money on it. So they don't need so many soybeans. It's just, I don't know. We definitely got to change this.
All right. Well, I think we probably solved most of the world's problems here today. So
we're trying.
Rich, appreciate you being the podcast one more time. Where they can find your podcast and get in contact with you.
Yeah, go to criticalpointpod.com. You can email me at criticalpointpod@gmail.com or rich at ag-financial.com. But yeah, hit me up, give me some questions, give me some ideas, but take a look at my website, get on board here. We got a lot of stuff coming at us the next 5 years here.
For sure. Rich, appreciate you being the podcast. We'll catch you again next time.
Thank you so much.
All right, stay tuned for more Moving Iron podcasts after these messages.
Looking for more accuracy, more productivity from your current planter? Let's get exact with precision upgrades from John Deere. Start with Exact Emerge and get accurate singulation and spacing at 10 miles per hour. Or choose Exact Shot to promote early root growth and cut fertilizer costs. And with Furrow Vision, save time by verifying seed depth right from your cab. Visit johndeere.com/planner upgrades and see why nothing runs like a deer.
All right, welcome back to Moving Iron Podcast. Aaron Finwell and talk about what's happened in the marketplace. Aaron, how are you doing today?
I am doing quite well, sir.
Good, man. It is,
marketplace is alive and well. Thanks for calling. Talk to you next week.
It's alive for sure.
Long time, first time.
They had, this week. Here we are. Okay, we're going into 1st April. Obviously, planting season is in. Depending on where you're at, it's either getting ready to start or in full swing. Working your way through stuff, as this particular winter has proven to be, if you are basically east of I-25, I guess would be, or east of I-29, it's been winter, right? If you've been on the other side of that, it's been like Florida. It's been winter in Florida, right? So
it's not a little warmer.
It's been nuts, right? So here we sit. The Panhandle, we've got about we rely heavily upon irrigation out here. The mountains have gotten next to no snow. As it sets right now, there's going to be places that get less than 30 days worth of water, which you need. Just for the people listening, you need more than 30 days of water to make the crop work. So
you need more than 30 days of water to make your lawn work.
So it's a issue that we have coming. The drought situation, as you look at the drought monitor across the spectrum, it's not really. The eastern side of the countries was in some drought situations. They're not. It's lightened up quite a bit from what it's been.
Right.
But as it sits right now, we got some struggles coming at us on top of what we've already seen. As you take a look at the number, like Greg and I talked about earlier, like as you look at the number of auctions coming on right now, they're not slowing down, right? And as you look at this time of the year, typically you see that's a typical slowdown time. You start getting into April, things kind of slow down a little bit, and they kind of get through planting season, and then they, May, June, July timeframe, you see some pop back up, and then you start hitting it again pretty hard in August, right? As it looks now, like this month's going to be, April's going to be a stronger auction month than March was, and March was a stronger auction month than February was, and February was just stronger than January, and it's like every month is better, is more than the time before. So that's showing some signals there that the number of equipment that are there. So there's a lot of machinery on the marketplace, but the stuff that we see come through auction right now isn't necessarily a bunch of 1-year-old stuff. No. But what you see come through is quality stuff. You're seeing a lot of quality stuff come through there. Right?
Well, and that's because there's not much going on for dealer auctions and whatnot.
No,
for the late model come one come all dealer mega consignment auctions, there's not much of that out there right now. What the auction market's full of right now, unfortunately, is farm sales.
Yeah,
actual farm sales, whether they're choice retirement or forced retirement. That's they're all over and constant, and not a cool thing, in the world, because it tells you everything you need to know of what's going on in the ag economy. But because that's what's out there, it's, just like Pete mentioned that 2010 Magnum. I mean, that's what's kind of out there in the world that guys are paying attention to, watching and grabbing. And it's not that good quality 2-owner 10, 15-year-old, 5 to 15-year-old stuff is what almost every auction has on it. And that's what, I mean, we talk about that every week. That's kind of the hot spot of what guys are after. So come one, come all, here you go.
Yeah. So from a volume perspective, I mean, this stuff isn't how the best way to put this. So if you look at how this whole thing plays out, of course you see a lot of stuff back in the Midwest. There's always a lot of auctions. That's not right. It's always a lot of stuff. When you start looking at the quote unquote fringe states, the fringe parts of the Corn Belt and those kind of things, you start running into you don't typically get as many, because like we talked about earlier, like you said, like way more diversification, right? I mean, they got corn and beans, or corn and soy and sugar beets or whatever it is, but they also got cows. They got alfalfa. They've got edible beans. There's like 7 different crops. They're going to have inside their operation. So the diversification, if one's not doing good, there's usually something else, and they can meet in the middle and hopefully make it work out.
Make it work somewhere.
Yeah. So, but where we're at, and I would definitely call where we're at here on the fringe of the Corn Belt by every stretch of everyone's imagination. But if you're looking at this, we're starting to see those pop up, and there's getting to be one or two every so often to turn into, like, now it seems like there's 1 or 2 or 3 auctions in this general vicinity almost every week now. And it feels like that pace is picking up. So I mean, I guess you see it every day. So what are your thoughts there?
That's, kind of my personal gauge of how bad is ag ever is, are there local farm sales? Now, I say that because we don't even grow soybeans. So that's how fringe we are. We have corn, sugar beets, dry beans, wheat, alfalfa, millet, cattle. Okay. Surely one of them 7 things is working. If you want to get real fancy, throw sunflowers in there too. Milo. Okay. Now we got 10 things going on out there. Surely something's clicking, and cattle are. I mean, let's can't say they're not.
Yep.
But still, in our world of diversification, to see the amount of farm sales, and I mean, it's a big area, say Rapid City to Santa Fe and everything in the mountain time zone right there. Just chunk that little piece of the world out. There's plenty of farm sales in there, and that is not a very common thing.
Right.
Even in $7 corn era, you'll have retirement sales in the Corn Belt. Maybe someone got over their skis a little bit, too many Denali's. And then you have the legit retirement, the guy's like, ooh, hey, I'll take that last check and I'll watch from the porch from here on out.
Yep.
You always have that over there. I would even say Grand Island East, all the way to the ocean. Out here, you typically don't. And there are a lot. And they are regular. And that is a really big indicator, and not a good one, of where we're at.
Yeah. Yeah. And I think that same scenario is being played out over and over and over again. And I think it's a multitude of things too, right? So you've got some guys that are legit retiring legitimately, right? Like they're just
right.
I'm done. I'm out. And then you got some that are you need to downsize a little bit, or hey, you need to do X and do Y. It's happening there, but the thing that really strikes me about where the market's at, for as much what we just laid out here is a very distressing thing that we just laid out, right? But you look at where the market's at, and it's not to say that everyone doesn't have any money. That's not what I'm trying to say here. But that 3 to 5 year old stuff, that 6 to 10 year old stuff that's out there and older, if it's in really good shape, it's bringing like top dollar amounts that I would, and even stuff that's not even that good of shape is still bringing top dollar stuff. A couple of reasons. One is go out and talk to some dealers right now, and what they don't have a lot on the lot right now is that 5 to 10 year old something, right? They don't have a lot of that sitting on the lot. They got a lot of 1 to 2 year old stuff, 1 to 3 year old stuff. With that 5 to 10 year old stuff, they don't have a lot of. I talked to dealer the other day.
No 30s, no 20s.
Yeah. Like I talked to a guy the other day. He's like, in any spectrum of farm equipment, I don't have anything that's 5 to 10 years old. Like no combines,
where is
tractors, exactly.
I'll tell you where it is. It's every Tuesday online. It's every Wednesday online. And that's we're in that market, and we've talked about this on here. Steffes, Big Iron, Sullivan, I don't care who it is, the dealer or you on Marketplace and Craigslist, it's the same number. Right. You get in that 15-year-old tractor, it's the same price. It don't matter who's got it, where it is, what it is. It's the same number. And guys are like, well, I'll just throw it on there. And then I did sell it myself. Didn't have to answer. Well, typically on Big Iron, you're still going to get some calls, that kind of thing. But that's where we're at. That is a whole different marketplace.
And I think that's the new normal, my opinion, my personal opinion.
I think you're exactly right.
As I look at things matriculate through, man, I mean, I could be honest. I mean, and maybe I'm off here, but I look at the marketplace and I see, if you sit here and tell me tomorrow that we have $7 corn again, I don't see a bunch of people line up going like, hey, we're going to get that new combine. Hey, we're going to get that new tractor. Hey, we're going to get that new sprayer. Hey, we're going to get that new. The guys that are buying new now will, right? The guys that have been looking at that 1 to 2 year old piece, okay, I'll go get that 1 to 2 year old piece now, right?
Right.
And I think the biggest beneficiary of $7 corn isn't new. It's going to be the 1 to 2 year old stuff that's out there.
I was just going to piggyback on what you were saying and say that $7 corn now, as much as it destroyed any relevance of a normal market a few years ago, it'd be a market.
I don't think it changed. I don't think it changes anything.
It'd be a market fixer now.
Yeah.
I think it would. I think, no, what I mean by a market fixer, Casey.
Yeah, it brings everything back.
The late model low hour buyer is back.
Right.
Guys are back to their, what we as a dealer think of them as their typical cycles and their typical boxes they select out of, instead of, $7 corn. Everybody who buys it all the way to 10-year-old used, run to town and buy new. We won't have that. We'll get back into our boxes instead of everybody bought new, bottom fell out. Everybody's sitting here going, oh my God, now what? Which gets us to where we are today. It would be a market fixer, if anything. It wouldn't cause, I am 100% in agreement with you. It wouldn't cause any kind of crazy run to town for new.
The thing about that is that run to town, the new thing you just talked about, because of how things have moved into the boxes that they're in now. If you just say, for example, we increase the number of new combine sales by 50%, right? So you go from 0 to 1, right? So let's just think about it here. I got to go back and look. It's been a minute since I looked, but it's, there's probably, the last time I looked, they were right around 1,000 used 1-year-old combines on the marketplace, right? So let's double that, right? Let's 50%. So now there's 1,500, right? The numbers are small enough now, and the impact is big enough now that adding 500 more combines to the used marketplace, right, at a dynamic number here, could be a backbreaker. Instead of being like, because like in the past, like you'd have 1-year-old combines show up, there'd be 2,500 to 3,000 1-year-old combines hit the market, and that we fought that every year. Every year that I've been in this business, we fought that. These last couple of years, we haven't necessarily fought the number of machines. We fought the number of buyers coming to buy those machines, right? Then that's a myriad of reasons, right? Not farm income. You have the price of equipment, like all those things are playing out now, right?
Well, not only that, but the machine jumps so much itself through
exactly.
Process.
Exactly, right. As you watch those things kind of level themselves out and play out, as I look at the new marketplace and what the quote unquote new normal is going to be, you're going to go out and sell some new stuff, and you're going to generate 1 to 2 year old stuff, and those guys that are buying annual rolls and those kind of things, I think those start to. You do an annual roll every year, but it's a section of your equipment and not all of your equipment, right? I think that's what that morphs into. Like, hey, we're doing tractors this year. Hey, we're doing combines next. We'll do planters next. We're going to rebuild. We're going to do that, and we're going to work our way through all these things. As that continues to trickle, the biggest play that I think we're going to see is the rise of, well, why would I trade my, just like you talked about, if I can sell it for $85,000, or I can buy it for $85,000. I'm sorry, if I can sell it for $85,000 at an auction, or sell it for $85,000 or $90,000, you're going to give me at the dealership. You're going to sell it for $85,000, $90,000, and then you're going to have your margin expectations, those kind of things, which are going to mirror the auction marketplace, right?
Right.
So if you sell for $85,000, $90,000 at the auction, and they're going to sell for $85,000 or $90,000 at the dealership, you're going to net the same. As far as what trade value is versus what when they take their commission off the piece when they sell it. Or I'm going to sell it on Facebook. I'm going to sell it on Facebook, Craigslist, or some, for sale by owner site or whatever it is that you're doing, right? That to me becomes the new normal.
First,
a lot of folks.
FARSELL.
Yeah, that's right. That's right. If you look at it from the perspective of the overarching marketplace, man, to me, I don't see a lot of instances where it is advantageous for someone to sit back and say, yeah, I'm going to take my 10-year-old whatever, and I'm going to go trade it in, or hey, I'm going to take it and sell that at an auction, or hey, I'm going to go and do that. The only thing I could think would be is the speed of which you need to make something happen. If that's a deciding factor for you, right? You can take it to an auction in 30 days, you liquidate it, you're good to go. You take the dealership, trade it in, and the trade differences and all those things you're done. You're done in 30 days, right?
Yep.
Selling on Craigslist, or that could take 6 months. It could take 2 weeks. Who knows, right? It could be just whoever's looking for it at the time. But to me, that segment of the marketplace is going to be what could very well stagnate the 1 to 2 year old marketplace, 1 to 3 year old marketplace, because you've got to have a guy got to go out and find an Aaron Fennell to trade his 5 or 6 year old something into a 1 to 2 or 3 year old something, right? So that I can then have that 5 or 6 or 7 year old piece sitting on the lot for someone to come by, right? I gotta make that happen. I gotta now go find all those customers, and I gotta bring those customers into play. So then I can now that I've got a 3 to 5 year old something, now I can find a guy that's got a 6 to 10 year old or 7 or 12 year old something to trade in on this piece I'm looking at here. So I have to put all these pieces together to make it happen. If I'm a dealership, if I'm an end user guy someplace, I don't have to do that. I just put it out there and someone comes and buys it.
Yep.
There's not a trickle down of where the cash money, all the cash in those machines flow to, like you see at the dealership, which that you have to have that churn at the dealership to make things work, right? And for the health of the marketplace. The health of the marketplace is what really that dictates what all those machines are worth that you sell on Craigslist and Facebook and at the auction and everything else. That trickle down, all of that is what dictates how those machines' values come out and play. Exactly. So at the top end is selling fast and selling quick and selling good, and you're bringing good money there. Everything else behind it's going to do the same thing. If there's a struggle at the top, the struggle might not be as bad in the middle, but there's still a struggle in there somewhere. Just from the pricing perspective, for the value, not necessarily buyers, but the value of those machines.
Right.
So
this popped into my head as I'm talking about $7 corn being a market fixer. Then that is it is to get as far as my thought of getting guys back in their boxes. But you know what else it does? In a small way, it actually impacts the segment that doesn't need any more impact right now. What are they trading? Everything they're trading is in that 3 to 5 range.
Yeah, I know.
So you're gonna have that little nugget that is probably, I would say that's the softest nugget, the softest little group in the equipment business right now. You're gonna slug a whole bunch more into there. Now, you're not coming into it with 2 years ago ideas on pricing. You're coming into it with right now, and you got your auction data and sale report and all that. But that's something just popped into my head as a little bit of, it would get everybody fixed, except everybody's trading. See, as a used guy, there's always got to be a little gloom somewhere, right? So we fixed the market. God, everybody's trading the same thing.
Yeah, and that would be the example for that. But I also think that would be, so I look at this next uptick that we see right now to look and feel a lot like the cattle guys did, with the exception of how updating, wear item parts, right? Like combines, chockers, those kind of things, like ground engaging things, like where there's a lot of wear items coming through. But you start, if if I have a big slug of cash coming to me at an operation right now, there's a lot of other things I'm going to do with it besides buy equipment first. Right now, I want to buy equipment. Don't get me wrong, but there's a lot of other things I need to do first before I can get to that part. And
that's why everything's been so nickel and dime for 3 years. There's a lot of stuff that needs caught up. Yeah. Besides the tractors and combine and planter, there's probably.
And it comes. Go ahead.
You might need fix a grain system. Yeah. Might need to fix 18 pivots. I mean, who knows?
Yep.
Where everything is just so shoestring for so long, you don't just go buy tractors.
Yeah, exactly. And so that changes the dynamic too. So does it look like the cattle guys did? I mean, the first 18 months of the cattle boom, they weren't buying loader tractors, right? They weren't even buying balers for that matter, right? I mean, like there was just a lot of things that were being kind of done on the other side of that. And I mean, I kind of get it. You're record cattle prices. So the last thing you're going to do with your money is when you're having a hot hand at the table there. Last thing you're going to do is just try to see if we can't get a couple other degrees of difficulty on top of this, right? Let's throw some other some more gasoline on the fire over here. So I look at that and say like there could be a very delayed reaction to what that might look like to start with, but going forward, I think as you look at this is the first time I can sit here and point this in my 20 plus years of doing this. First time I can sit there and point that our inventory right now is as close to absolutely perfect as you can get it without it being perfect.
Boy,
there's still some dingers out there. So don't get me wrong. There's still some things out there that are soft, for sure. But when was the last time that we were in a situation like this? We looked at your lot and it wasn't completely jammed full of stuff.
Brazen comments from Mr. Seymour this morning. Brazen comments.
It feels like to me, it's just as you look at dealer lot, you go by dealer lots and you look at them. They have things. They have plenty of equipment, but they're not.
They have room to walk around the machines though now, and they didn't 3 years ago.
So let's go back to like 2014 planter debacle, right?
Mm-hmm.
Planter and air seeder debacle. There were so many planters and so many air seeders on dealers' lots.
Don't forget
combines.
First 2 years of S-Series combines.
Yeah. There was so many of that stuff on there that I remember walking around dealer lots and just there's a windrow out back of air seeders and planters, right? I remember going to auctions and the amount of planters that were available for sale at an auction dwarfed the number of combines that were for sale at auctions. You know what I mean? Like you go to auction, like, oh, cool, we're selling the 35th planter today. All right, great. You know what I mean? Like, and there'd be 10 combines.
And you have one option in size of planter.
Yeah, it only had 24, not 23, not 25, 24 was your pick, right?
I need a 12-row. Well, here's two together.
Yeah, cut it right there, and you'll be good. But that situation today, I think if you had a dealership come to you and say, hey, we're gonna have a big auction today. That big auction today, I don't think would be 50 combines and 65 tractors. It would be 10, 15 combines and maybe 8 to 10 tractors. That would be a big auction.
I was going to say 10 and 20 maximum.
Yeah. And that would be a banger. And they would be like, oh, cool, good. We're good for the year now.
Yep.
And not, hey, I'm going to have 3 auctions this year. We're going to start out with this one over here that's got 25 combines or 30 combines and 25 or 30 tractors. And then we're going to, I guess we probably should have sold 40 combines and 50, just like, and next thing you know, you're down to where they liquidated 100 tractors and 65 combines in a year. Like that's done. That's not happening anymore.
No.
Now, I don't want to say it's not happening anymore because that's a very bold statement. But I mean, it's
not happening with the frequency. It literally just was 18 months ago.
No, and I don't see a situation in the coming years where there's enough brand new stuff sold that is going to create an epic oversupply and overglut of equipment. If anything,
Right.
now there still could be inventory issues because there's not enough buyers for the handful of stuff that's out there. I mean, if you have one machine and 0 buyers, you have a problem, right? So it's just like you have to work your way through that. All that being said, I don't see a situation where we run back into an area where, regardless of crop price, that there's a big run on machinery. I think it's going to be isolated to that buckets of I'm a 1 to 2 year old buyer. Hey, I'm a 3 to 5 year old buyer. Hey, I'm a 6 to 10 year old buyer. I'm a new buyer, whatever it is. Like those are pretty solid at any price, in my opinion.
Yeah. I would say this onto your, as far as seeing that mega late model auction business. Having gone through the 14 market readjustment, and then we dealers all did it again in 19 to 22. My take is this: when everybody got over their skis, quite frankly, overselling, that's a term you never hear, overselling in 12 through 14, and then dealing with that 14 through 16, it was, and granted, on a pure percentage basis, it was just as ugly then. Okay. On a percent basis, it was just as ugly then as it was 23 to 25. The difference is that percent is still 30. That number's doubled.
Oh, sure. Yeah.
And that
100%.
We as dealers, we are able to tweak and twist and move and shake and get out of the problems in a far simpler, less bloody fashion, even though there was literally, just in sheer numbers, more of them than there was this time around. And it's it's my biggest thing with the market we're in now. It's not number of machines, it's price of machines. That's the scary thing. Everything in front of the store is $500,000 at 5 or 6% or whatever. And you open your pickup door on the lot and it's cha-ching, 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 like, oh God. And to go and rid that problem right now is a way bigger hurt than it was 10 years ago. So I truly think we as dealers, maybe, just maybe, will be more careful next time.
Well, I think
this might have been the lesson, if you will, on whoa. Now, part of that, not our fault, not mama's fault. Stuff just didn't show up. Supply chain issues. That was a 2-year thing. So,
yeah, I think, I don't know that we'll have the opportunity. Dealers will have the opportunity to even if they wanted to do that again, because there's not enough buyers.
Right.
That can go out. I mean, like coming out 12 and 13. I mean, everybody. I'm gonna change my 9610 in on a 9770, right? Like that. I'm gonna go get I'm gonna go get a 24-row planter, and I'm gonna put the Orthman shadow tracker and the one tripper and and everyone just line it out, golden hammer it all the way through.
I'm gonna do everything I can to make my planter $500,000.
And the thing about that is, that was a $250,000 planter back then.
Yeah.
So you could buy a planter, a combine, and a tractor, and maybe half a sprayer for what one 1-year-old combine costs today.
Yeah.
Isn't that crazy? Put it in perspective like that.
Yes, it is. It's very crazy.
So, yeah. So last thing here, like, as I look at the marketplace and I see where things are heading, we had a huge jump in price. You know, I've told the story before, but on 10 years ago, 8 years ago, something like that, I sat down and modeled out with price increases and standard price increases and, a few model changes here and there, and maybe the occasional black swan event type of thing coming through. I had this whole thing lined out, and where I had pricing today was in 2035. That's where I had prices out today. Was in 2035. Like, the price that we see today, we should see in 2035 is where I had it set up at.
Wow.
No, I'm not saying that my model was accurate or right, but I'm just saying, like, just, you took just basic everyday things that happen all the time, like normal range of price increases and those kind of things that, here we are. Some things that we saw 10 to 15% price increase. I'm going to take that back. You saw 15 years worth of price increases, 10 to 15 years worth of price increases jump up in 2 years, basically, across the board. So that's going to take a long time. It's going to take a long time for this to trickle back down and become a normal marketplace again. I think we're heading into that period now as we look through 26 into 27. But I think it's 28 before you really get, all right, we're back to a quote unquote healthy marketplace again. And I think we're in the verges of it now. We're seeing the light at the end of the tunnel, but it's going to take all the rest of 26 into 27 to really calm down the pricing. And but we got all this other stuff going on too, man. You got all these geopolitical things happening across the world right now, and who knows where that, $150 oil won't help anybody, right? And that's going to be that could be a problem. It'll help corn. It's like you got a good jump on corn, but guess what? Your fertilizer costs now go right up with, I know. So it's a dangerous do, dangerous
on that part. Focus on the price of corn.
Yeah.
That's why I make all my friends mad. I'm like, come on, $5 gas. They're like, what in the hell is wrong with you? I'm like, just wait.
Just wait and see. Exactly. All right, man. Good place to stop.
Hey, real quick, I feel like you keep pushing that date out. I wish you'd carve that date in. I feel like it was 26, then it was 27, now we're 28.
No, I've always said
I'll do you better. I think by 2040 we're in a normal market.
I've always said 26 is a normalizing year, right? Where everything now is not going up anymore. It's not going down. It's just flat.
It is. Right? Honest to God, boots on the ground, it doesn't feel any different than 17, 18, 19 right now, honestly.
Yeah. And I think 27 is okay. Now we start moving it up a little bit, and 28 is, hey, we're healthy again. So, I mean, we're in that.
Stuff's moving. You got to try a little harder and fight a little harder, but little creativity on programs, rates, whatever. But stuff's still moving.
Yep, for sure. And it's going to. It's not like it's just not.
We sell things that break and wear out. That's point blank,
Well, that and we're also in a space and time where it's not going up anymore, but it's not going down either. Right. It's like it's kind of leveling out. It's stepping up. I mean, it's getting better it's better than it was last year, right? I mean, so it's price wise, right? I mean, and as far as volatility goes, it's way better, right? So like all those things make a big difference, but as you trickle your way through it, you're going to be right in there. So,
it's a little bit of catch your breath reset.
Yep, for sure.
Catch your breath. Here's where we're at for a while. Continue on.
Yep, for sure. Okay. High Plains Wholesale. Folks want some of that super, super awesome deals when they find that out.
Super awesome deals. Well, that's what we like to hear. You can catch High Plains Wholesale on, there's a Facebook page and a TikTok page account, whatever you call that on TikTok for High Plains Wholesale. On my socials, just under my name, Aaron Fintel, I share the same videos. Once in a while, a static display, meaning still pictures, no video. On Twitter, Facebook. You can also find me on LinkedIn if you want. And you can call me or text me, 308-760-1193.
Right on. Casey Seymour, you can find me Facebook, Instagram, X, LinkedIn, wherever else, at Moving Iron Podcast and Moving Iron LLC. So check it out there. You can hear the audio version of this over on the AgWeb page, under the podcast section, and you can also see it on the YouTube channel, Farm Journal's YouTube channel, there as well. I want to thank Aaron for being on the podcast, Greg Machinier, Pete Peterson, Sean Hackett, and Rich Possum for being on this week's Moving Iron Podcast and laying down some stuff. A lot of stuff to pay attention to. Never been more of a time that I've been around here where there's everything that happens every day changes the market every day. So just a lot of stuff to pay attention to. So with that, I am Casey Seymour and the Queen Smart folks. Out.
Thanks for joining us. We'll see you again next week. And remember, Moving Iron is available on Farm Journal's YouTube channel and anywhere podcasts are found. So until next time, let's move some iron.